Elena, we were talking just before the close about the VIX and the sort of calmness we've seen there, below 20, now down in the 17 handle. Is that something you see as a very bullish signal, or is it the calm before the storm, as it were, that things are just looking a little bit too easy right now?
Thanks for having me and for the question, Will. No, I think the markets finally kind of felt the clear pathway forward in a way, right? And that's what we've seen, like positioning, like Mike said before, kind of calm down, et cetera. I think people are positioned for, the start of the recovery. I think what's really, really important to focus on from here on is the potential and how do you manage that in your investments and or portfolio for inflation to pick up, right? We've seen this be more and more prevalent in conversations. We've seen the incredible data we've had in the last couple of weeks, and we think it's key for people to start, if they haven't, positioning portfolios for this, especially in a potential that you have inflation picking up. Now, not only we have the trends of deglobalization, the central bank policy changes and all that, but we have, like Governor Brainard mentioned in your interview, also the base effect pressures on prices. So what happens when you have now a paradigm that's different from the last decade, where you have higher rates, lower equity valuations, and the potential of equity fixed income correlations going positive, right? And how do you manage risk and volatility in your portfolio? So we think that's very key to focus on right now.
So if inflation is your theme, and you say there's still time for investors to position accordingly, how do you do that? What do you recommend?
So we have started to position to that, and I'll go through kind of the path that we've taken and how we're looking at it going forward. So we started last year around March, obviously, when five-year inflation break-evens, went under the historical averages. We started buying tips and put some commodities in portfolios as well. We also, throughout the year, reduced duration with some fixed income strategies when appropriate. And then recently, actually November 1st, we got ready for the recovery after pretty much a lot of the things that we were looking at checked the boxes for a full-on recovery, and we added some exposure in travel and leisure and some in regional banks. And then recently, at the beginning of the year, we added more positioning to metals.
Shepard Smith here. Thanks for watching CNBC on YouTube.